The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. I'm your host, Steve Rhodes, coming to you live from Denver, Colorado. Thanks so much for joining us. Absolutely love being here with you. Our call-in number is 877-927-6648. And, talk about the Go Long America Tour. Got kicked off last night, and just, can't express the appreciation for both Tom and myself on what a absolutely fantastic event. You talk about some fuel, some energy, folks, and just the hospitality, the kindness, the hugs, the handshakes, just seeing so many great Tigers, and there is nothing like being with family, and it was just great. It was a lot of emotion, if you will, and thank you, Angie, for coming. Angie, her husband wasn't feeling well, but she was able to drag him out, and it was absolutely just simply a fantastic event, folks. Tom and I will be on a plane here in just a little bit, heading to Spokane, and we are really fired up and looking forward to getting out there. Folks, it's not about getting what you want. It is about experiencing what you really need by becoming more, and that is so true of what happened last night. There is nothing, talk about how to really grow your business and the mindset that you have to be in, but there is nothing, yesterday I put in a 22-hour day. I was up at 4:30 Eastern Standard Time. By the time I shut my computer down and got my newsletter out, it was 2:30 in the morning, and you would have thought I could have gone to sleep, but I was so excited with regard to just simply what went on and the amount of information that was shared with folks. I mean, it's hard to really express the value. When you take a look at Tom, he just kicked things off. And, folks, if you're in Spokane, you're anywhere near the area, like we had folks driving from 2.5, 3 hours away last night. They absolutely got a great value, incredible value. So if you're even a little bit interested, just a little bit interested in either learning a money management system, learning about trading, understanding what technical analysis is about, looking to be able to maybe find some solutions to your existing business, whether it's your money business, maybe just trying to find some ways to be inspired, then you really should join us in Spokane tonight, because you will experience what you really need by becoming more. That's what it's all about, and so just absolutely great event. And thank you to each and every one of you. We're looking forward to seeing so many of you. We go to San Francisco on Thursday, so you can also sign up for that as well. And then we'll be in Boston on March the 3rd. And just really, if I tried to even put a price tag on what was, Tom had people up on their chairs last night, which was so cool. I peeked in every now and then. I was still working on some fine details of my presentation. I would peek in and I would see people up on chairs. So, folks, join us. We'd love to be able to see. And thanks again for everybody that did join us. Now, yesterday, great day in the markets, if you will. Right now, you've got the Dow is off about 10 points or so. NASDAQ off about 4. ES Mini down about 2. You got gold trading down $5. You've got silver off 41 cents this morning. Light sweet crude only down 31 cents. We'll take a look at that. We'll go take a tour around the world. You can always give me a call, 877-927-6648, and you can watch us on TigerTV as well. And the first chart that I've got up on my screen here is the ES Mini. And I want you to really notice here, on the ES Mini is when we made the highs, when the market made the highs on the 19th, made the highs in the ES Mini on Friday. So, yesterday you had all kinds of talk about the Dow over 13,000, but the ES Mini still really didn't get much traction, if you will, because the high was put in on Friday, was put in at 1369.50. Now, ever since that high, what is it that you see out here? Well, one of the things that you see a continuous stream of lower highs. You also see lower lows. That is a sign of a bearish leg, if you will. What you also are seeing here is you're seeing just nothing more than 0.786 retracements. This is where I've got my cursor at here. You can see a 618 retracement, a 0.707 retracement. And when you take a look at, as it's moving down with these lower lows, what you are seeing here are expansions to the downside. Contractions, expansions. Folks, it's just simply the current cycle, if you will. And again, we're looking at a 30-minute time frame. You would expect in that 0.382 area, you would expect to be able to have some type of support. And that's what we're seeing here right now. We're going to need some volume either way, whether you're going up or down. We know there wasn't the volume inside the markets yesterday. When we take a look at the volume in the ETFs, or just simply the number of shares on the NYSE, I think it was around 700 million or something like that, and 100 of that million came in during the last hour of trading. And so on the ES Mini, where could the ES Mini be going to? Let's go over and take a look at the actual index futures themselves. So let's go take a look at the ES Mini. That's what I'm going to blow up here on my screen. And, you know, what you are seeing is that the ES Mini has now made it back inside this wedge shape. We're going to take a look at the SPX as well so you can see that pattern. And you did have the EX Mini. It peaked its head outside of this ascending wedge. And, folks, an ascending wedge, you want to be able to visualize and draw these on your charts when you see them, because when you take a look at, you know, we were wide here at the bottom, which started on the high of this wedge was on December the 7th. The low was on December the 19th. And as this wedge pattern continued to be made, look how it just simply stayed within inside it. Now, you're trading towards the top. And why you want to understand these wedges, folks, are because, especially an ascending wedge, it will resolve itself to the downside. Almost always. I don't know what the percentage is, but I can tell you it is such a significant percentage that you need to be paying attention to it. And look at as the ES Mini here, this is the daily chart we're looking at, look at as it continued to try to peak above it. You know, and you take a look at the 17th, how it tried to peak above it, maybe just close just a hair. If you take a look at February 21st, if you will, that was yesterday on the futures. So you can see how it peaked above that, came back down, yesterday on the 22nd, so yesterday back inside the channel. So a real narrowing wedge pattern that you've got there. And what you want to do is, if I just pull this back here a little bit more, you can see that we're still trading inside the swing point from May the 2nd. The high on that swing point, 1373.50. Again, this is on the ES Mini. Low on that, 1354.75. Until you break one side or the other, really no information other than being aware of the patterns that are out there. Now, where's the first area of support if this does break to the downside like they normally do? The first area of support is really going to be this descending tops line. That descending tops line goes all the way back to 2007. The screen size that I'm working with right now is small enough I can't really pull it all the way back there. But that's going to be the first area of support. Where is that going to be? Somewhere in that 1320 range. And if we just simply go ahead and we take the Fibonacci retracement, just simply coming back from that December 19th all the way up to the high that was made there, you know, what you'll see here for that is 1303 is really that 0.382. And so that 1303 area, 1320, is really going to be that first area of support. And then if you can get below that descending tops line, folks, what it's going to bring into play, and where I really expect that the market is going to release some information for us, is back at October 27th. Just remember how long we were taking a look at October 27th, looking at as the market got up there, not getting up with volume, got over that with volume, and certainly one of the things that Tom was able to share with the folks live, let them see some real charts, if you will. Not that we don't always show charts, but, you know, such a great event. Show how where Walmart was going to. I know Tom even gave out a couple of trades yesterday. And so where things are going to fall back to, likely you've got to be aware of this October 27 swing point, at least in the ETFs, most of the stocks that are out there, because that is typically where you've seen the last bit of volume. And so let's see here. We've got a caller on the line. I believe we've got Doug in Denver. Let's go to Doug in Denver. Doug, you there?
I am.
Doug, good morning. How are you?
Good morning, Steve. I'm
Thank
doing
you for joining
well,
us last night.
Well, I unfortunately I wasn't able to make it. Actually, I'm from Greeley, which is about an hour north of Denver.
Oh, okay, cool.
And I was having car trouble, so.
Well, let me tell you, it was a great weather day. You know, nothing like traveling and landing, folks, and having some blue skies, if you will.
Oh, I tell you what.
What was interesting, Doug, is, you know, Tom and I, we left fairly decent weather yesterday. It was probably in the 70s or so when we left, and we were bundled up. You know, we had on our wool socks, our leather jackets, and last night there were folks that were showing up in shorts. I said, how could that be? How could that be? Which was so cool.
That's why we live in Colorado, you know. Yeah. You can wear shorts one day and you wear your coat the next.
Yeah, no, it's really, really, really cool. So what did you want to look at?
I wanted to take a look at UNG.
Okay. Let's pull that up here, folks. UNG is the ETF for the natural gas contract, and Okay, let me see here. We had a reverse split on this, and so I tell you what, we're going to be going to commercial here in just a minute, Doug. So if you'd be kind enough to stay on the line, then when we get back, we'll take a look at UNG and anything else you want, folks. 877-927-6648. So great to be back in the saddle again. We'll be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. We got the Dow futures are off about 10, NASDAQ down about 5, ES Mini off about 1.75. Over in Asia last night, you had the Nikkei up 90 points. You had the Hang Seng up 70 points. DAX right now trading down $39, and we are going back to Dan from Greeley, Colorado. Dan calling about UNG. That is the ETF for the natural gas contract, which did a reverse split last night. So, folks, if you're in that trade and you woke up and you see that it's trading right now, it's actually trading out at 21.81. All it was a reverse split. You're still in good shape. And so, Doug, tell me what you're looking at. How can I help you here?
I was a little confused by that. I didn't realize that it had a reverse split, and so I was looking at the price, and I was like, woohoo, but apparently not.
you're just as rich this morning as you were when you went to bed. Well, maybe a little bit off because the reverse split actually put it up to a price point of 22.08 is what I'm showing, 22.04. You're trading out at 21.81. The actual natural gas contract right now is down about 13 pennies. But still, what this is doing here, just simply building cause. You've got accumulation going on right now, it looks like, down at the bottom on UNG as well as on the natural gas contract. And, as far as what you'll need to do, what folks will need to absolutely do is adjust their stops in this. And, it's going to require some manual calculations, but you're certainly going to want to have a stop below the 2048 area and probably a little bit below that. And like I say, right now trading out at 21.81.
Okay.
Does that help you? Is that what you're looking for? Or is there?
Yes. Yeah, that helps. Yeah.
Yeah. So,
about,
where I'm going with that stop, if you will, is I'm looking at you've got 2048 in essence, which is converting the the UNG ETF for the reverse split. You got 2048 on February the 15th, in essence, would be the low. You also have 2048 on February the 9th. That has 10 million shares. It's really that February 9th area that should act as a support area for us. So, but I'm going to have to go back and probably take a look at that. Well, I know I'll be doing that for my clients because we are in the UNG trade as well.
Right.
You're just as rich, I'm telling you, just as rich right now as you were when you went to bed last night.
Well, I do subscribe to your newsletter, and that was, and I did buy the UNG through your recommendation. But so I appreciate the guidance on the adjustment.
Yeah, no problem. In fact, we had Scott from Colorado Springs. He was good enough to bring it to my attention yesterday, and I meant to, when we got back to the room last night, I decided, okay, I had so much energy, I was going to sit down and work on the newsletter, a little bit abbreviated compared to normal. It was, like I say, about 2:30 my time, and that was the one thing I did forget to do, which was go back and figure out what that reverse split was. So I'll follow up after the show this morning for folks, all right?
All righty.
Hey, thanks so much for calling in.
Right.
I really do appreciate it, and we'll look forward. I'm going to be back. This is such a great state. Love Colorado. Got to love the mountains. There's nothing like flying in, wind or no wind, nothing like flying in, all of a sudden seeing some snow peak around the corner, and then those peaks, and then, we were in the Pikes Peak room last night. People talk about peak oil, if you will, which I don't believe in peak oil, but I do believe in peak performance, so it was cool that we were in Pikes Peak room last night, and it was all about peaks performance. So I'll look forward, Doug, next time that I'm back here, I'll look forward to seeing you, all right?
All righty.
All right.
Thank you,
Have
Steve.
a great day. Folks,
All right.
877-927-6648. That's the call-in number here. Let's go around the world here. Let's go see what it is that we've got going around the world. As soon as I can find my charts here, let's go take a look at the DAX. The DAX is trading out right now at 68.6510. You can see at the DAX what the DAX has done. It's made a 0.786 retracement off of that July high. The July high there is 75.23. 53 cents. And you also, if we come back and take a look at the DAX, in our markets we made October 27th, really an important area. That's, as I mentioned in the first segment, that is going to be the first area of support if the market decides to take a breather. And folks, if you're a bull, you want the market to be able to take a breather here. And the reason is because the market, unlike myself, it doesn't have the Steve Rhodes energy, if you will. The market does not have the energy right now, that does not have the fuel in order to be able to push itself up. So if you are bullish, the thing that you're looking for here is you are looking for the market to back off. You're looking for that ascending wedge pattern to complete itself, and you're looking for it to back off, and you'd love to see it back off into October 27th or October 28th so that it can recharge, so that it can get the type of energy that we've got at TFNN. Folks, we'll be right back, going to a quick commercial break, 877-927-6648. We go back. We'll come back. We'll go see how these markets are going to pop, whether they're going to drop. Give us a call. I'd love to hear from you, folks. We'll be right back.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. TFNN has an exciting announcement. As part of our Go Long America contest, Tom O'Brien and Steve Rhodes will be hosting 4 live in-person workshops that are absolutely free to attend. Denver on February 21st, Spokane on February 22nd, San Francisco on February 23rd, all from 6:30 till 9:30 in the evening, followed up by Boston on Saturday morning, March 3rd. Steve Rhodes will show you how to understand the power of 1% and how to master probability, along with avoiding getting stopped out of trades early, while Tom O'Brien will speak about the intense trading power of Tiger Gartley and butterfly patterns. All of these workshops are completely free to attend. Come see Tom O'Brien and Steve Rhodes live at one of these free workshops as part of the Go Long America Tour. For more information and to reserve your seat today, visit the front page of TFNN.com and click on the Go Long America Tour banner.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races, folks. You've got the Dow trading down 13 points, composite down 9, S&P's off 3 points right now, small cap down 3 points as well. So you get the small caps and the composite leading the charge, down about 0.25% on the you got Google trading up 53 cents right now. Apple, I haven't looked at Apple yesterday. That is trading down $4 right now, out at 5.1033. Microsoft up 14 ticks, out at 31.58. Intel is flat. Cisco up 3 points on the most active, if you will, from a dollar standpoint. You've got Fire. Fire is absolutely on fire. That is up 15%, 41.47. Garmin up 10%, trading up $5. Mosaic, that's trading up 4%, 59.15. On the downside, Apple, from a dollar standpoint, down the most, down $5. You got Netflix off $4.47. First Solar, that's trading down 4%. That's off $1.83. Dollar Tree down $1.72. We'll go take a tour, take a look at that, what's going on there. What I'm going to first pop up here on the screen is the S&P 500. And we were taking a look at the ES Mini. We were looking at the daily chart. We were showing the ascending wedge. And you can see here on the ES Mini on the cash, what you can see here, folks, is you can see how this ascending wedge pattern, it is absolutely amazing. It is, why it works, I don't know. I just know that it does work, and that's so important just to understand what does work. You can see how, that the S&P here has traded with inside here. We are starting to get close to a very narrow area. I do expect to see this resolve itself to the downside. Like I say, from a bullish standpoint, you want to see that happen because there is just simply not enough energy to get up and over the swing point from May the 2nd. That's really the area that it's trading in right now. If you're taking a look at the S&P cash, you're looking at the low of 1358.59. You're trading out at 1361.05. But what you want to mark down on a pad of paper right now, 1358.59. That is the low for May 2nd. Now, look, if you close below that, that still isn't any conviction because you've got to be able to break this wedge, and exactly the price point I can't tell you. But you can draw this in on your charts as well. If you want to draw this in, this ascending wedge, just simply go back to the November 28th and November 25th swing point, if you will. They both were at a low there of 1158.66 and 1158.67. I like that 1158.67. So that's where I start my wedge pattern. And then the next connection point that I use is January 30th. So just let your line continue to stream up from there. On the top of it, if you will, I use that December 5th high on the S&P cash. What you're looking at is 1266.73. And the next touch point that I'm using here is going to be January the 26th, the high out there of 1333.47. You want to give it a little bit of wiggle room, if you will, but just look at how it's so amazing. That doesn't amaze me. It's just simply the way that these patterns work here. So you're trading inside there. Again, that first area when it does break from this wedge pattern, and this thing could actually trade with inside here for several days to come. I mean, what the heck? It just simply keeps crawling up, and if you're a bear, what you'd love to see is you'd love to see it actually go up and test the top. You'd like to see it go test the high of May 2nd. On the S&P cash, you're looking at 1370.58. Do that with lighter volume. Close underneath it, then see some volume off the top. That's what the bears would be looking for. If you see light volume on the pullback, again, where I'm taking a look at the S&P cash pulling down to is the high of October 27th. That high there, 1292.66. Let's take a look. Let's go take a look at currency because, I said one of the stocks, Fire, I don't know what they do, but they are on fire, leading the market. But the real fire, if you will, has been over in Japan. You take a look at the U.S. dollar, Japanese yen chart, folks, and it is trading up at the intervention that the finance ministers in Japan had on August the 3rd. I think that was a Thursday or a Friday. I remember when that happened. It was late in the day. It was Thursday, as I recall, and we had just one heck of a movement in the number of pips in the Japanese yen. The high there on that day was 80.23. You're trading at 80.239 right now, just a tad over it. And what you can see is that the yen, after making just a little bit over a 0.786 retracement, coming down into February 1st, the low there was down at 76 bucks and a little bit of change. It has just simply had nothing but a straight move up. Now, what this means in a straight move up is that the yen is weakening, King dollar getting a little bit stronger against the yen, and that's good for us. That is good for you. It's good for me, if you will, because the yen has been super strong. That makes the goods more costly for us to be able to import the things that go inside the devices that we use each and every day. And the yen, what you would be doing is you'd be going back, and you would be taking a look at the next major swing point that was out there. Now, we got to pay attention to where the intervention, by the finance ministers has, come into play, because you're up against that area right now. Again, that's that 80.23 area. Can it bust through there? When you take a look at this move off the bottom, I do believe that it can. Is it possible for it to pull back? Sure, but it has got, I think this has got even more energy than I've got, which is hard to believe. And I think what the U.S. dollar-yen currency pair is trying to do is get up into that 0.618 area. That would be logical. That's in the $81.68 area. And the reason why you want to understand expansions and contractions, if you take a look at the expansion off of this set of swing points here that I'm measuring, that set of swing points, folks, on the end, going back to January 4th, the low there, 76.59, all the way up to the swing point that was made on January 25th. The high there, 78.27. You will see it did a 1.272 expansion right here that held as support. It was a little bit more than a 0.786 retracement. And the way that the yen was trading, and I missed this trade because it was trading below the 0.786, I was really aware of this 1.272. But what you can also see here, folks, and I'll show you why I missed out on this trade or didn't take that trade, and that's because when you take a look at this expansion between this last set of swing points right here that I'm taking a look at that we just talked about, as it was coming into the lows down here on February 1st, what you also saw was the 1.618 expansion down at 75.56. Well, 75.56 to 76.14, that was too many pips to risk. And would also look like this candle right here, you don't see, it's not marked or it's not marked on my system, but October 31st, even though there was intervention, you talk about a bullish engulfing candle, folks. I mean, that's the granddaddy of them all. That thing engulfed so many candles, I can't even go back here and count how many candles. It engulfed candles going all the way back for at least till August the 9th, and that day of that engulfing was October the 31st, folks. That was strong. Well, as you're coming down into here, and it was past the 0.786 retracement, the trade that made sense was waiting because you had a 1.618 expansion at 75.56. The low on that bullish engulfing was 75.49. It made sense to me to wait. Oh, boy, I wish I didn't wait on that, because this has turned into one nice trade. Now, what do you want to do here, folks? What you want to do here is you want to wait to see if we can get a pullback inside the U.S. dollar, Japanese yen, before you play that. That's on the daily chart. Intraday, maybe if you're an intraday trader, you would take a look at that as well. Let's go take a look at the euro. Let's see what's happening over in Euroland. Greece is going to be out of our picture here for a while, so let me find that currency pair. We'll pop that up on the screen here. This is the euro-U.S. dollar, and you talk about having no energy. There is absolutely no energy inside that currency pair. Euro-U.S. dollar trading out right now at 1.32331, 1.32427. That's the 0.382 retracement off of the highs here on October 27th. It's, just hanging up here. It can't bust them up. Just can't bust them up. And, folks, if it can't bust them up, it's going to go try and bust them down, or at least it's going to do a retracement. A normal retracement here on the euro-U.S. dollar currency pair would take you down into the first area, which it already did on the February 16th. It got into the 1.305. That's a 0.382. Where the euro could be headed, and would be just simply normal, is going to be 1.28993. Why is it so important to understand where the currency market is going, folks? Because there simply is that correlation between King dollar and our marketplace, and so you want to understand what's going on in the currency marketplace. What you also see right down here in that 0.618 area, is an A to B equals C to D, would take you to 1.29438. That 1.28893, folks, that is the 0.618. That's where I would expect us to see the euro go down to. That would make a Gartley buy if you're coming down there with just simply some, not any long-range bars, just some nice small bars, if you will. Then that would actually be, you want to take a look at going long that currency pair. Let's go take a look at fire. Still trading up Looks like 7.72. Maybe somebody in the den can just, because my screen sizes here are so small, and I'm just trying to keep what is being fed into the den as opposed to everything else on this little screen here. Maybe somebody can tell me what is FIRE. F-I-R-E, that is the ticker symbol. You can see how this thing has gapped up. I don't know, is there a buyout going on? And when we take a look at FIRE, you can see trading out right now at 43.73 and gapped up. And you talk about volume, talk about busting out here. 871,000 shares traded already this morning in just simply the first 14 minutes of trading. Yesterday, this thing closed out. This little baby closed out at, 35.82. Let's pull this back and see what is happening. I'm going to have to pull this and take a look at this on a monthly chart. Let's see what we've got on a monthly chart. Ooh, man, everybody is loving this party. What? I got to go find out. Maybe I'll do that during a break, exactly what is going on in FIRE, what the news is that is out there. This thing is, maybe somebody says cyber security. Wow. Well, this thing is absolutely on fire here. And, if this thing were to pull back, look at this thing is, and I've got the monthly chart up right now, and it's up over the October 31st area. That had 17 million shares. Of course, our month is starting to come down to a close here now. This is a leap year, if you will. We do have February 29th, and you mark down on your calendar, February 29th, you want to make sure that you wish a happy birthday to David White, our one and only David White, and Polar, as he's known as in the den, the power of least resistance. So, pretty cool. Absolutely, in my opinion, pretty cool to be able to have a unique birthday like that. Not that many out there, if you will, that have got a February 29th birthday. Let's come back and take a look at the weekly chart on this. And everybody is on fire. They are enjoying this party, having a good time. This would be a great stock, just initially to take a look at if it were to pull back into October 29th. That October 29th area, folks, is a high of 32.79. It did 11 million shares during that week. And let's see if this is completing some patterns here. Let's take a look at the expansions that we have going on out there. Nothing that I see here real quickly. Pretty cool how just simply from, I guess, when this thing may have came public, if you will, the high that was first made out here on the weekly was March of 07. March 30th of 07, and look at how it makes a 1.618 expansion. That's going up from the high of March of 07 all the way down to the low that it put in down at $3 and change. That was down in November of 2008. Makes a 1.618 expansion of that, pulls back a bit. In fact, if we take a look at where it actually pulled back to, if I can find that tool here, that would be nice. There we go. There's our fib tool. Let's see where this thing pulled back to. That pulls back to just a little bit around the 0.382. And what we know about our ABCs, folks, is this. And let's go ahead and draw that in here on the formation tool. When you only pull back to a 0.382, that says you've got some real energy in your A to B equals C to D. If we draw that in here, you will typically do more than a 1 to 1.272. Well, you can see right now you've blasted through that. The 1-to-1 would take you to $40.94. If we go take a look at where could that go on a 1 to 1.272, looks to me like this is headed to 47.40. But what you want to do is you would like to be able to maybe take a look at buying this thing on a pullback, coming into the high right around 32.79. That is on fire, F-I-R-E, and they are on fire when we take a look at what's going on in the markets. Let's go take a look at Garmin. Garmin, obviously, they've got their rangefinders out there. They are up trading today out at $49. That has gapped up. You can see 49.03. Take a look at that gap here. Let me, why don't I have volume on Garmin? Let's see if I can, there we go. I don't have it because I didn't have the boxes checked. So we got Garmin. That thing is up today on the volume, already trading out 2.4 million shares. Let's pull this thing back. How about that? Okay, there we go. I knew that this thing was. Let's go take a look at, pull this thing back to a weekly chart and see what the heck we are doing out here. Let's see here. Coming up into the, it's above this consolidation. So what you have with Garmin is coming into the, let's take a look at this downdraft here. These smaller charts a little bit more difficult for me to take a look at, but trading right now in the swing point of the week of June 2008. The high on that is 55.50, low of 48.02. You can see you're trading inside that right now, trading out at $49 $2,058.23. Look at the cause this thing has been building. It has been making, just slightly higher lows here. And, is Garmin ready to come back? I got to take a look at this chart a little bit further. In this case here, Garmin, what you'd be taking a look at is, you see here, up over this swing point here from March of 26. 877-927-6648. Time is flying, folks. Remember, join Tom and I. We are going to be on an airplane heading to Spokane in just a little bit. We look forward to seeing you there tonight. Same thing in San Francisco on Thursday. Be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. And absolutely stay tuned because coming up next is my compadre. He's going to be doing the Money Masters. We only got one phone here, so he'll be doing the Money Masters show. And then following that, Wednesdays are absolutely great days because we got Basil Chapman. He will be in today. Then we got Larry Pesavento going on. We're going around the world, if you will. And then you've got David White from 3 to 4 today. You got the Dow down right now, 9 points. Composite off 5. S&P's down 2. Small caps down 1. Google down $1.50 right now. Apple off $3.34. And fire still on fire. I guess it was their earnings, up 17% right now. And cake, let's go take a look at that cheesecake factory, if you will. Looks like they are not having their cake and eating it, too. That is trading down right now at $29.84. You can see you've got some volume in this thing. You have only been trading here, let's see, for about 25 minutes. Already has 1.1 million shares. Yesterday, you did 1.8 million shares. Where is that thing? Let's come back and take a look at this. And, the cool thing is understanding, these supply lines. Tom talked about it last night. And that's why, folks, you want to join us in Spokane, in San Francisco, in Boston, because, what he would show, he would pull up this cake chart, and he would take a look at it, and he would say, folks, go look at July 21st on Cheesecake Factory. You'll see that gap down. You'll see that downdraft. You'll see 4.9 million shares. That is the high-volume bar sticking out there. That's the first place you would go to. And right now, you can see what happened is you had the Cheesecake Factory get up into it. It came up into that area 2 trading sessions ago on February the 17th, if you will, and it came up into that area with 1 million shares. It got up to a high of $32.13, closed at $31.98. This gap is still open up. Well, no, maybe not. Let's see. The low of that gap is actually where it gapped down is July 21st, the low of $30.69. What did it do yesterday? It gets up to $31. The $32.47. Let me make sure I got this right here. Low, $32.47. Okay, $32.47 on July 27th. That is the low. What does it get up to yesterday? $32.47. 1.8 million shares. Closes the gap. Coming in with 1.8 million shares. But here, folks, Tiger Gartley. Oh, and it's a Tiger Gartley. How about that? Tiger Gartley, too. And, coming in and taking a look at that high-volume bar. So now, what do you have here, folks? You've got it coming down, gapping down with volume. Where's the next area of support on this? Well, you'd go take a look at the next volume bar. That next volume bar that you've really got out here on the Cheesecake Factory comes all the way back to October 20th. If we just simply take our Fibonacci retracement tool, go from the lows put in here where it did a bullish engulfing, that was on October 4th. You can say that about so many charts, if you will. You can see the first area of support where it's coming down into this 29.10 area. Trading out at 29.74. That's a normal spot, 0.382. But this is a long-range bar. Even though, you've got this gap, you take a look at that as being a long-range bar. So it makes sense that where this thing would come down to and where the next volume bar is at that 0.618 area, 27.02. And so you want to take a look at, we'll watch Cheesecake Factory, if you will. Let's go take a look at what else we have moving. Let's take a look. Well, Apple, just up near its highs. Let's go take a look at, how about let's go look at the spiders. Let's go take a look at one of the spiders out there, if you will. Those are the 9 sectors inside the S&P 500. Let's take a look at the energy sector here, trading out right now at 75.61, but time is flying. Folks, thanks so much for joining me. Absolutely great to be here with you. Stay tuned. Tom O'Brien, he'll be filling in. He'll be doing the Money Masters show. I'll be in the background, razzing him, if you will. Stay tuned, folks. Have a great day, and I look forward to seeing you in Spokane, either in a few hours.